Good afternoon, ladies and gentlemen, and thanks for attending today's webinar. It's designed to help brokers just like you prospect, sell, and retain more long-term clients. The purpose of today's webinar is to educate you on the Insured HRA. It's a new product many brokers are calling the best they've ever sold, and it's fully compliant with national health reform. Now, most brokers know the typical HRA strategy. You raise your client's current health plan deductibles, which in turn lowers health insurance premiums. Next, you have your clients pay for any employee claims incurred within the new increased deductible. Hopefully, at the end of the day, your client's premium savings will exceed their claims payments. But the typical HRA strategy makes employers shoulder all claims risk. And while reducing insurance premiums means reducing commissions for brokers, that's something we brokers never like. Insured HRAs, on the other hand, are a new strategy, but as you'll see, they're exactly what both brokers and employers have been looking for. They eliminate all employer financial risks, they guarantee savings down to the penny, they smooth out cash flow concerns, they pay brokers full group-like commissions, and they are fully compliant with national health reform. We think you're going to love this new product. We value your time, so let's get started. My name is Dick Chelton. I'm president of Chelton Benefits Group. We help brokers across the country prospect better, sell easier, and retain more business than their competitors by using marketing strategies that actually work. We're product wholesalers only. Our specialty is third-generation medical gap insurance. It's the best tool we know of that creates significant dollar savings that can go directly to the client's bottom line or to pay for new product offerings your client needs, like long-term care, for example. Finally, we aren't home office geeks, nor are we employed in the home office sale prevention department. We're agency builders. We've already built and sold a multi-million-dollar benefits agency by offering creative products and unique services. We know what it's like to prospect, sell, and retain business better than any home office representative ever will. Feel free to lean on us as your backdoor marketing department. We believe you won't find anyone better than us. So why are we here today? Well, simply, health insurance costs continue to rise. Insurance carriers continue to cut our pay, and the government continues efforts to put us out of business in 2014. Frankly, we're all searching for new income sources. Increasing commissions based on healthcare inflation just doesn't work anymore. We can help. Today, we're discussing a new product, the Insured HRA. It's a supplemental insurance plan that's both a great alternative to typical HRA plans, and it's also a great alternative to any lower deductible plan where the client needs to save premium costs. And really now, who doesn't need to save costs today? Unlike a typical HRA, our Insured HRA actually pays full group-like commissions first year and renewal. And again, this product complies with national health reform. Our unique selling proposition is that, unlike any agents your prospect or clients have ever spoken with, we can reduce health costs as much as 10 to 20%, maintain current employee benefits, usually maintain the current insurance carrier, eliminate all employer risks, and we can explain the strategy in 12 minutes or less. Now, if your prospect or client is actually listening, that's a pretty impressive selling proposition. And given that everyone is interested in ideas that will work now and beyond 2014, the Insured HRA is a great strategy to discuss with everyone you meet. How does it work? Well, it's as easy as 1, 2, 3. 1. Raise your current deductibles and coinsurance. to $5,000 or more. 2. Add our Supplemental Insured HRA policy. 3. You now have 2 plans, same benefits, for less dollars. At this point, let me assure you that the Insured HRA is acceptable for use with most carriers today. If your carriers will coexist with typical HRAs or voluntary supplemental insurance plans, then they'll have no problem with us. Feel free to contact us to discuss your local carrier requirements. The best carrier designs we've seen recently are as follows: health plans with doctor office visit copays and prescription drug copays. Health plans with $5,000 of deductible and or coinsurance. Health plans where the monthly single rate is more than $100 less than your current single rate. And while we do work with self-funded plans, our sweet spot is in the fully insured arena, where clients are looking to save premium dollars, but they still want to avoid any risk. Let's take a look at 4 recent cases where we employed the Insured HRA. Case number 1 was a 91-person employment services company. They offered their employees a $500 deductible 80/20 plan. Their current monthly premiums were just under $67,000. At renewal, their premiums increased to just under $71,000, a 6% increase. Now, normally the agent might have just suggested the employer pay the additional premium to keep the benefits the same. I mean, what else could you do other than increase employees' contributions or deductibles? Well, what we did, we recommended increasing the employer's deductible to $5,000 with the same carrier. We then inserted an Insured HRA product that covered everything within the new deductible, so the employees still had a $500 deductible 80% plan just like before. The result? We saved this employer $155,933.52, and we knew exactly what the savings would be up front. The employer saved money without risk, the employees maintained their benefit levels, and the agent made commission on both the major medical and the Insured HRA. Case number 2 was a computer consulting firm. I visited with the current agent and I asked the employer, if you had had a 0% rate increase instead of the 19% rate increase that you did have, would we even be meeting today? The employer-client replied, no, of course not. I have too many other issues on my plate. So we suggested an alternate health plan with $6,000 of out-of-pocket expenses. And then we implemented the Insured HRA so the employees would still only see a $500 deductible and 20% coinsurance to another $1,500. Same plan as before, and we brought the employer's health costs to $17,279.28 less than they currently had been paying, and $55,373.76 less than renewal. It was one of the shortest successful meetings I had ever been involved with. Case number 3 is a real eye-opener. We were invited to help a broker obtain a new client, a 200-person auto dealer group. Their rates had skyrocketed, and they were looking for an equivalent plan with lower costs. So what else is new, right? We ran numerous proposals with various carriers and alternate strategies. Finally, Blue Cross won the business with their high deductible plan and our Insured HRA. The savings were staggering. I'm hoping for a discount on my next car purchase. But seriously, this auto dealership saves money and the agent picks up a new client. It's a win-win situation. Every municipality and school district in this country seems to be scrambling to balance their budgets. Here in Michigan, the state has passed a law capping rich benefit plans for municipal workers. In an effort to maintain the same benefits for school employees, we recommended increasing the plan deductible to $5,000, then filling in the new gap with the Insured HRA. Now, as a side note, we can provide as rich a benefit plan structure as a $250 deductible, then 100% benefit coverage. Here we did just that, and we saved $878,294.64. Now all that's left to do is to negotiate with the school union about that pesky $250 deductible. We pointed out to all parties that even if we reimbursed every $250 deductible, that would only amount to $70,000, still saving over $800,000 annually, or $3,200 for every employee. Think of how many cities, townships, villages, and school districts in your region you could be assisting right now. So this sounds too good to be true. What's not covered? Well, the list is small. We don't cover doctor's office visit fees. That's the charge just for seeing the doctor, not for the services in the office like lab tests, surgery, etc. We don't cover outpatient prescription drugs, but remember both office visits and prescription drugs are usually handled by major medical copays, so they really become a non-issue. And we don't cap family deductibles. So for example, if we create a plan with a $250 deductible, then 100% coverage plan, everybody in a 5-person family now has a $250 deductible. But other than that, everything is covered. Oh, one more thing. We are not HSA compatible. Our program works with high deductible plans, but only those offering office visit and prescription drug copays. So, who's a good prospect? Well, obviously, auto dealerships and public employer groups. Big law firms are usually great opportunities, as are any groups with deductible plans less than $1,000. And while we write groups as small as 5 lives, any 50-person group with almost any carrier is a great prospect. How do you get an insured HRA quote? Well, the process is so easy. Just visit our website to obtain our quote request form. We only need the following: current plan rates and plan design. Renewal rates. We ask for renewal rates so we can create a full proposal for you, showing where your client currently is, where they are going to at renewal, and then how much we can save. Also, provide us alternate rates for a high deductible plan with at least a $100 spread between the current single rate and the new high deductible plan. We don't need any age census, just the number of singles, couples, and families. So in summary, before you renew any group, before you see your next prospect, before you consider a typical HRA, consider the Insured HRA. It's fully PPACA compliant. There's no employer risk. Employers pay level monthly premiums. It pays you level commissions. And it guarantees savings for your client right down to the penny. It looks like we have a few minutes available for some questions, and there are several questions that have come in. I'll answer as many as we have time for. First question: who is the insurance carrier writing the Insured HRA product? Great question. It's Standard Life and Accident, rated A Excellent by AM Best. Second question: how easy is using this plan for employees? Another great question. We explain this to employees as a 2-card, 3-step claim system. You show 2 cards up front, and then step 1, the major medical carrier pays its portion. Step 2, Standard Life and Accident pays its portion. And step number 3, employees pay their deductible and or co-insurance cost portion. 2 cards, 3 steps, easy. Employees are also provided special vinyl ID card holders, so they always show both cards. Providers are used to 2-card systems already. Case in point is Medicare and also coordination of benefits. And as a result, aren't having any problem getting their claims paid. Third question, how do we enroll this plan? Well, simple as we can make it. It's a list enrollment, so there's no employee apps needed. We can take spreadsheet enrollment. We could take apps from the major medical carrier. We can probably take names on a napkin. Again, we make it easy. Final question, how do we communicate this plan? We customize smartphone video apps with studio-produced employee meetings, and we supply them to every employee for every group. It's truly the way employees want to get their information today. You can visit our website and view a 5-minute webinar that explains this great new service. Once you see a client's eyes go wide when they see the technology, you'll want to offer your clients this video service as soon as possible. So in closing, please feel free to contact us here at Chelton Benefits Group to discuss your very next quote. Once you see the savings you can create, we believe you'll be showing the Insured HRA to every prospect every time. Thanks again and have a great afternoon.